Hey, y'all, happy Friday. Happy Friday. It has been a wild week, but a great week. So, I am happy to be here to share with you all some more tips that will help you prepare for a successful tax filing and give you ideas on things that you need to do to save on taxes. When we first started this series or this broadcast, we started talking about commingling funds. That was the first topic. And that's because that is a huge error that I see every single year. You must separate your business and your personal transactions. Okay, we talked about that. We got past the commingling funds. Last week, we talked about the DIY, doing it yourself. And when you do it wrong, when you do your bookkeeping, it may seem so simple, like, okay, the transaction come through the bank account, I'm just going to put it in this category, boom, that's it. I would like to say that bookkeeping is that simple, but it is not. You have to have an understanding of tax and accounting. You have to know how things flow from the bank account to the profit and loss statement and the balance sheet. And that's where a lot of people make mistakes because they don't understand the tax and accounting side of bookkeeping. A lot of things that may make sense to the common mind, it does not make sense according to the tax law. It is either illegal or incorrect. So today I want to close out the conversation about the books around I want to talk about the three common things that I see that are incorrect on your profit and loss statement. But before I get into that, I want to introduce myself to those of you who may not know me. My name is Caritza Kearns, and I'm the owner of K&K Tax and Accounting Services, and I am an enrolled agent and certified tax coach. I help real estate professionals redirect money from the IRS back to their bank accounts. Basically, I help real estate professionals save thousands and thousands of dollars using legal tax strategies and loopholes. So, getting to the topic for tonight, the first thing I wanted to talk about that I see on the profit and loss statement often are personal items. Like you all are deducting things that are not business related. And it boils down to your understanding of why these things cannot be deducted. Prime example, your mortgage payment. I see the mortgage payment for your home on the profit and loss statement more often than not. You can deduct the interest and the taxes on your tax return, but that is not a business expense. What is deductible for your house, you can deduct the home office space. That is a space dedicated for business purposes only. You cannot use your dining room as a home office space. It has to be a dedicated space for your office. So that is what's deductible, not the mortgage. The other thing that I see come across on a profit and loss statement quite a bit is car payments. When you purchase a business vehicle and you take that 179 deduction. What is the 179 deduction? It is when you purchase a vehicle over 6,000 pounds and you take the bonus depreciation and deduct 100% of the cost of the vehicle. Well, after you take that uh, big depreciation for the cost of the vehicle, I have seen car payments come through on the profit and loss statement. So, what that essentially does is you are deducting the cost of the vehicle two times. You deducted it on the bonus depreciation, and now you are deducting it through the car payments or the SUV payments, the truck payments, whatever your vehicle is. And how that is supposed to work, the loan for that vehicle, that is now liability. So that liability should be on the balance sheet. And when those car payments come through the bank account, the principal payment should be applied to the liability, the loan on the balance sheet, to reduce that over time as the payments come in. but you can deduct the interest that you're paying on the loan. So you have to be able to calculate what is the principal payment and then what is the interest payment. So you want to be able to deduct the interest payment on the profit and loss statement, but the principal pay, you want to deduct the interest payment on the profit and loss statement, but the principal payment is applied to the liability alone on the balance sheet. And the last thing, the third thing that I see come across on the profit and loss statement that should not be on the profit and loss statement are quarterly estimated tax payments and other, tax liabilities. Once the IRS assess a tax for you and it is a liability, you are not able to take a deduction for that liability. What you and you really don't want to, especially when I know you do want to for the tax liability, but for the quarterly estimated tax payments, when you send that through and deduct it as an expense on a profit and loss statement, which is incorrect, by the way, you are only reducing your taxable income. So you're only getting credit for, it's only reducing your taxes by a percentage, whatever the percentage your tax bracket is. It's only reducing your your taxable income by a percentage. When you file your taxes, the quarterly estimated tax payments are applied directly to your tax liability, dollar for dollar. So if you ended up with a tax liability with $6,000 and you made quarterly estimated tax payments of $5,500, then that is applied directly to the $6,000 and it leaves you with the liability of $500. So your quarterly estimated tax payments and your taxes that you pay that are liabilities, the bill, those should not be included on the profit and loss statement. Those are, credited, in other places. The state is credit, you get credit for the state in other places, but your federal tax liability is not a deduction. And your quarterly estimated tax payments, that's something that is factored in after your tax liability is determined. That is not a deduction that should be on the profit and loss statement. So those are the three common things that I see on the personal not personal, on the profit and loss statement. So just make sure that when you are doing the profit and loss statement and your balance sheet, look at it to see, if you understand it. If you have questions, make sure that you are working with an accountant who is going to educate you and explain these things to you so that you will understand the numbers in your business. I cannot stress enough how important it is to understand the numbers. That is the first thing that you need to get together. That is the first thing that you need to understand, especially if you are looking to grow and scale your business. You have to have your numbers in order. So we've talked about that for 3 weeks. It's been 3 weeks already. So we've discussed like the profit and loss statement, how to handle your business funds and things like that this week. We are not going to broadcast or meet next week, but stay tuned for the following week. After that, we'll be back with more information and more content that is going to help you in your business. Don't forget, please feel free to drop your questions and comments in the comment section below, and I will check them out and I will reply and include it in, future topics. So on that note, I hope you have a great weekend and I look forward to seeing you week after next.